Hello and what is going on, lovely people of the internet? It is Hootmoney here with another video for you guys today. Today we have a very important update for Vinco Ventures and BBIG. The stock is down about 6% today as I speak, sitting at around $7.82. Vinco Ventures has now been placed on the threshold security list as I predicted throughout all of last week, and this further confirms some of my theories that I had about the stock leading up to 10/15 expiration of last Friday. There were so many suspicious things going on. I made 2 videos about it this weekend, and you guys should definitely check out those videos. One of them was synthetic shorts explained, and then legal naked shorting. Those 2 videos on BBIG were some of the most important videos that you could watch, so you should definitely go back and watch those if you haven't already. But in the meantime, I'm going to be adding on to those, seeing how my theories did come true, and with all of that, let's just get right into it. So as you guys can see, we have the daily chart for BBIG. Throughout the gamma squeeze of last week, we saw increasing volume, with the most volume being on 10/15/2021, with yesterday rapidly decreasing in volume. The volume was almost cut in half, and now today we're only about halfway through the day, but it is appearing to be a bit less volume. Now if we look at the hourly chart, there actually was a bit of a short attack this morning, and I'm going to be going over that once we get into the Ortegs data, but the price of BBIG has crossed below the 25 and the 50 moving average, and now the 25 and 50 are about to cross, which could be a potential sign of a downtrend in the stock. The RSI is a bit oversold. The MACD is coming back down to earth as well. Now there are 2 different scenarios that could play out with this chart. So the bullish scenario is that we have bottomed out right here at 780, and we are just going to see some consolidation, maybe some sideways trading as volatility has died down. And I do believe that if we can hold above 780, that is very bullish, and we'll be just setting up for the next leg up. Moving back over here, you guys can see the prior run in BBIG. It did use the 50 moving average once as support, but it did break below the 50 moving average and the 25 moving average, and the lines did cross, and it was actually a bear trap because it did run up again. So it's not out of the possibility that we could run up again, even though we have crossed below the 50 moving average. We're just going to see some consolidation. Now the bear perspective on this, and we're actually seeing a bit of a reversal as we speak, is that the price continues to trickle down back to the 200 moving average before it sees another bounce with dying volume that we're seeing here. Now if the bear perspective does come into play, then BBIG likely will sell off to the upper 6s. Now what is my perspective? I think that there is still some bullish room for BBIG, and I do think that the bull perspective of it's just consolidating and staying pretty flat before its next leg up is probably the likely scenario, and we'll get into this as we go through the video. Now considering that last week there was a gamma squeeze in BBIG, the volume dying down on Monday was a very likely occurrence. So the price action that we're seeing right now honestly is not out of the ordinary because we don't have that extra gamma push that we had last week. We also know that shorts have not covered yet, and obviously we're going to be going over the Ortegs in a bit, but there are a lot of reasons to remain bullish on BBIG in my opinion, and I do think that the next few days we'll see more consolidation rather than some crazy price moves that we saw in the past week. And if you guys did want to check out this charting software, it is WeBull Desktop. They are running a promotion. You can find the links in the description or in the pinned comments to sign up for it if you would like. They're doing up to $300 in free stock if you open an account with them, and up to $2,000 in free stock if you deposit money on their platform, even if it is only $1. So check it out if you guys want. The links are below in the description or in the pinned comments section, and let's just get right back into it. So I just wanted to plug my Twitter one more time. I made the goal last night to hit 200 followers by the end of the week, and we hit it by the end of the day. So first of all, that is awesome. Thank you guys so much for that. Another thing that I want to say about my Twitter is I actually called out ATER and CEI this morning. Now CEI, I did get in late. It was a bit of a chase, but I did think it was a good chase just because of the technical breakout that I was seeing in it. ATER as well, I caught before the breakout, as you guys can see right here, and it did end up breaking out as well. So I can give you guys these live updates on Twitter that I just can't do in real time on YouTube, so you should definitely check out my Twitter. It is at HootmoneyYT. Anyways, here we have the Ortegs data for BBIG. As you guys can see, we're sitting at a 262% cost to borrow. The utilization is now back up to 100%. There were 1.51 million shares pulled out of the market maker's butt, apparently, because I don't know where they came from, but they were borrowed today and likely shorted, and this number did increase right at 9:30 a.m., which I do believe was the short attack that we saw in BBIG. Now we're going to keep going over this because I just simply don't know where they got 1.5 million shares to short. It makes no sense, but it happened. Only 650,000 shares were returned, so I don't know where they're getting these shares from, because, well, Fintel is essentially reporting that there's almost no shares ever available to short in BBIG. And you guys can see over the past week as well, right here, there was a 4,000 share excess that was put on loan that was not returned. Right here, there was a 1.3 million share excess that was put on loan but not returned. Right here, there was roughly 900,000 extra return shares. Right here, there was a 600,000 share excess that was not returned as well. So the fact that Fintel is reporting that there hasn't really been a point where more than 50,000 shares have been available to short, yet shorts are somehow finding out how to short millions of shares in a day, it's just, I don't know, it's not really adding up to me, and I really wish this data was live instead of delayed and having all this T+2 and allowing for failure to delivers. I mean, we have the technology, it's right in front of our face. There is blockchain technology that allows securities, or I guess not securities, but it allows assets to clear instantly, yet we have to wait 2 days for it to settle. I mean, the technology in the stock market is dinosaur technology at this point. Anyways, that was a little bit of a rant. Here we have the Fintel. We have a 5 out of 5,400 for the short squeeze score, so it has moved down a little bit on that leaderboard, but it's still pretty high. Again, there's almost no shares to be shorted. 5 hours ago, we got a 70,000 share excess, but shorts somehow pulled out an extra 750,000 shares, even though BBIG is on this regulation threshold security list. Not really adding up in my book, but you know, what can I do as a retail trader? I don't think I have too much power here besides for educating all of you guys. We can move down and see the borrow rate. You guys can see that just yesterday, this was at 40%. 40% right here. It's not letting me highlight that. But as of 58 minutes ago, it's actually nothing as of 58 minutes ago, but as of an hour ago, we were at 83%. It has doubled the borrow fee rate in a day. It's also on that threshold security list, and they're also somehow finding out a way to continue to short the stock. If it was easy to short the stock, the borrow rate wouldn't double to 83% in a day. I'll tell you guys that right now. So yeah, we're sitting at the highest borrow fee rate that we've ever seen for BBIG. Utilization is back at 100%. I really do think that there is something really brewing. There's obviously no proof that a significant amount of shorts have covered in BBIG. I wouldn't be stopped out of this one just yet. We can also see right here that the FINRA dark pool short volume ratio has gone back down. And this is crazy. So last week when we had a gamma squeeze, it was over 50% each and every single day. I mean, I'll just highlight it. 47, we'll count that. We'll round it up. Literally, October 7th through October 15th, we had a huge amount of short volume as a percentage of total volume. Then you can see right here, as of yesterday on October 18th, we now have back down to 35%. So you're telling me the week of the October 15th expiration date, there was 50% short volume, and now that that expiration is over, it goes right back down to 35%. And we're now back on this threshold securities list, and you're telling me that naked shorting isn't going on in BBIG? It's just completely illegal. The market makers and hedge funds are colluding to do legal loopholes that allows them to naked short, and they'll just report it as a failure to deliver and be put on the threshold security list. And now that it's on that threshold security list, they can't do those same tactics anymore. And I talked about this in my naked shorting video. I'm going to try to put a little card up there that you should really check out. So essentially all of my theories from last week are coming true, and you can see it right here in this short volume ratio decreasing. And now that BBIG BBIG is on this threshold security list, I do expect this short volume to stay at around 35%. I don't see it coming back up to 50%, but you know, I could be wrong. A lot of my theories do end up being true, a lot of them, but you know, I could be wrong. Here we have the whale option flow, 10,000 premium or more, ask side only, so straight buying of puts or buying of calls. And you guys can see that it's almost entirely call options here on this chart, and I'm going to explain to you guys why I'm not seeing the same amount of put options that we saw last week. And again, it ties into this regulation threshold list. So when a security is not on this threshold list, market makers are allowed to hedge their put option sells. So if they sell a put option, they're allowed to hedge that put option the same way you hedge a call option by buying shares. They're allowed to hedge that put option by naked short selling 100 shares. Actually, they're only allowed to short the delta value of the option. So if the delta is 0.60, they're allowed to naked short 60 shares. And this is completely legal. It's a legal loophole to naked shorting as long as the security is not on the threshold security list, because obviously if it's not on the threshold security list, if there's failure to deliver, if there's naked short selling, that's not a problem. It's only a problem if they're on the threshold security list. Anyways, the put options that we saw last week were not what we're seeing here. We're not seeing a 7.5 put or a 12 put. We were seeing a $20 put and a $24 put. And let me remind you, those options have the highest delta. The more in the money the put option is, the higher the delta, which means the market maker could naked short more shares in order to hedge. Now, the market maker isn't the one buying these, they're the one selling these. But there is a case where there is a market maker and a hedge fund that are both under the same entity, and they go by Citadel Securities. Citadel the market maker and Citadel the hedge fund. So in theory, Citadel the market maker could be selling these put options and Citadel the hedge fund could be buying these put options. Citadel the hedge fund now has exposure to the downside of BBIG, while Citadel the market maker is just providing liquidity, but they're providing liquidity by naked short selling BBIG, which in the end would allow Citadel the hedge fund to profit from their put options. So it's kind of like a reverse gamma squeeze, but they're doing it through naked shorting. And when we're just so lucky enough to get a gamma squeeze in one of our stocks, we can't just naked long a stock. We can't buy a stock that doesn't exist. But when the market maker has to hedge their put options, they're allowed to naked short. It doesn't make sense to me at all. It should be illegal, but it's legal, and it allows them to add short interest through these deep in the money put options. And at the end of the day, they're simply just using derivatives to naked short sell the stock, which is why this ended up on the threshold security list. Also why the short volume was so high last week. If we go back up here, again guys, short volume was over 50% all of last week, and then it suddenly comes down as of yesterday as we get put back on this threshold security list. And now magically we're not seeing the same amount of put options being bought deep in the money that we saw last week. So a lot is changing now that BBIG is on this threshold security list. And you're telling me that naked short selling is illegal? Guys, this is proof that they naked short sold BBIG stock last week. Anyways, before we wrap things up, I just wanted to show you guys the unusual whale alerts because it has been pretty accurate. There were call sells as of last week on 10/15. Both of them were bearish. They were simply just people selling their call options. I believe they probably likely bought these call options in advance. They're not just naked short selling these call options, but this was on option expiration date of 10/15. So the likely scenario was that these whales anticipated a volume decline now that the gamma squeeze is over, and they thought the stock price would go down with that decline in volume. Yesterday on 10/18 around 2:18 p.m. there was a put option alert, 650 expiring 10/29, and as you guys can see, the alert is currently up. So if you guys think that you're just being screwed, just know that Unusual Whales has these alerts, and there's probably some whale that knows more than you, and you can go off of these alerts to judge your sentiment. You don't have to buy a put option necessarily, but you can see that the last 3 alerts were bearish, and that might just give you an idea that there may be a pullback or some consolidation. That's about it for the video. I hope you guys enjoyed. I'm excited that some of my theories did come to play, and it's absolutely atrocious how they get away with these failure to delivers. They just write them off as failure to delivers. They can't possibly be naked short selling. It can't possibly be a market maker and a hedge fund colluding through put options. It can't possibly be any of this manipulation that the apes have been talking about for this entire year. You guys see that GME report? They essentially gaslit the entire ape community and just called us gambling degenerates. What I'm doing here is not gambling. What I am doing here is exposing tactics that are used by Wall Street all the time. The options market maker exception rule was amended in 2008 to not allow for this naked short selling to provide liquidity in these threshold securities because they felt like market makers were abusing it. It's literally written in the amendment, and there are multiple sources of people who are saying that the market makers abused this rule. So if they abused it then, why are they not abusing it now? They are abusing it now. And this is exactly why we didn't get an extra gamma squeeze push last Friday, because they're allowed to naked short to suppress the price and allow these call options to expire out of the money. I'm just going to go on I could go on a rant for literally 30-40 minutes about this, but I think you guys get the point. Leave a comment if you guys do, like the video if you guys haven't already, and subscribe for more. Hit that bell down below so you never miss a beat. Follow me on Twitter so you get timely updates of what I am seeing in the market. 100% free. My Discord is 100% free. It's my goal here to provide value for you guys on the channel. It's my goal here to expose the people that are doing you guys wrong as the retail investor. That's all I got for the video. I hope you guys have enjoyed. If you want to use that charting software, check it out in the description or in the pinned comment section down below. It's WeBull desktop, and I have been using it to chart out these stocks and find these breakouts. So definitely check that out. If you deposit $1 on their platform, you can get up to $2,300 in free stocks, so you might as well check that out using the description and pinned comment section down below. That's all I got. I hope you guys enjoyed and have a wonderful day. Peace.